I'll be starting off and do a very short presentation on how this fits within the broader context of value chain finance. Value chain finance is a comprehensive way of using the value chain and making finance and marketing decisions based on the structure of how that value chain is working. Warehouse receipts fits within that quite nicely. I think we know what a value chain is, so we can continue to the next slide. Defining value chain finance is really looking at the financial products and services flowing both to and through a value chain for those involved in a value chain, be it finance, be it a need to secure sales, buy products, reduce risk and efficiency. With the value chain approach being to really understand the value chain and then structure finance and the services accordingly. So it's aligning and structuring your financial products, and that's exactly what in warehouse receipts you're basically looking at the context of grain or whatever commodity you have and then deciding, okay, how can we take advantage of this situation to improve both the marketing outlets and the financing? Within a value chain finance, you have all different types of financial service providers on one side and then support services. I want to make emphasis to the fact that in warehouse receipts, just like several of the other financial products related with value chain finance, support services are very critical. And what we often find in warehouse receipts, for example, is that the support services are really, in the warehouse management, are really the make or break issues as to whether you can use warehouse receipts. What's the quality of the warehouse management and services? One of the things we talk about in value chain finance is different types of business models, whether it's producer-driven, buyer-driven, integrated, and then facilitator-driven is actually what FAO tends to work in a lot, where it's somewhat of a temporary business model, although it can be permanent, where you have a third party intervening in this. And much of the warehouse receipt work that our division is working with, for example, FAO and partner organizations are playing a facilitator role to helping bring some of the buyers together, the producer organizations, building their capacity, linking with, in some cases, warehouse receipt our boards and things like that within a country. And so a lot of our focus is on how to help build off of the situation that's in the country and make it happen. When I talk about value chain finance products and tools, I break it into 5 different types of products. I won't go into those here, but it includes, for example, trader finance, or some of the traditional ones are product financing, receivables and factoring are another way of using receivables as a way of securing finance. But here today we'll be focusing on what I call physical asset collateralization, using the product, using grain in this case, as your asset that you're collateralizing. The basic concept here is the borrower uses an asset, in this case grain, as a negotiable collateral. The asset is pledged in the warehouse. The borrower receives the rights to the proceeds of the assets, but they're secured in a warehouse. You can't take advantage of it unless you've cleared your loan, for example. If you do not do that, the owner of the collateral basically owns your grain or has access to it. So it's inventory-backed financing. In our division, we have, for example, a document called inventory credit. Inventory credit is a broader term covering warehouse receipts and other forms of inventory-backed financing. Leasing with equipment has some of the same concepts. Also, buyback arrangements are all using the physical asset as your collateral. So what are some lessons? One of the key lessons is all of this depends on understanding the value chain, the market, and the clients and partners. Market is critical in this case because it has a lot, the success or not in warehouse receipts has a lot to do with the type of market and the market price flows over time. Assessing the risk, then in assessing the risk, the competitiveness, relationships, and the rationale and the needs for financing involved in the chain. We really have to know what's going on, and then based on the understanding and assessment, structuring the financial services to fit that situation. If we need to be working with facilitation and complementary services with warehouse management, for example, yes, it's part of what we need to do for structuring. If the situation is such that we can use formal warehouse receipt programs, systems, fine. If it's not available in the country, then we structure accordingly to a different system. If we have other compensating systems of trust and a guarantee of security, for example, in the system. So with that, I'll stop, and we're moving to specifically talking about warehouse receipts as a financial product.